Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? I got a lot of people asking about the Vietnam dong. What's the latest and the greatest? Last we heard, the strong so-called US dollar is crushing many of the currencies around the world. And it's my theory that the US dollar is being used to crush the currencies to put everybody on a level playing field. Not for good reasons, for a bad reason. And that is they know our economy is going to crash, and it's going to crash big time. And the dollar is going to absolutely lose its value. People are going to lose their trust in the money, as well as other countries losing trust in their currencies, and given the World Economic Forum a good excuse to come out with a central bank digital currency. That's the direction that we're heading in. So let's find out what's the latest and the greatest with Vietnam's currency. The last we heard, they had almost 2 weeks of losing ground to the US dollar. It just continued to lose value. So has that particular trend continued? We'll see. Before we get started, do me a favor and hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, and now is a good time to buy this shine, that's for sure. Go over to our friends at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. All right, so let's find out what's going on over there in Vietnam. The interesting thing is they have one of the better economies out there, but for some reason, it's not reflecting that way. You'll see what I'm talking about. It says cracks in Vietnam, the latest alarm from frontier markets. So this is coming out of Singapore. It says financial markets in Vietnam, Asia's fastest growing economy, are in an unsettling slide as a crackdown on property lending, a failing currency, and rising interest rates heap pressure on banks and rattle confidence. The Vietnamese dong and the benchmark stock index are heading for their worst annual performance since 2008 financial crisis, with only Hong Kong and Russia stock markets poised for more losses globally this year. The selling spilling over from property stocks and bonds to the wider market has soured what foreign fund managers had touted as a promising post-COVID bet on country-drawn manufacturing investment from the likes of Apple and Samsung. Look, things are about to get tight. You already see companies tightening up right now. Twitter's getting ready to lay off a ton of people. Apple, Samsung, these people that were supposed to be over there investing, they're going to be laying off people because there's not a lot of demands for their products. There's not a lot of demand right now for these products. People are saving their money. In addition to that, they're only buying things that they need. They can't go around spending money frivolously. And because of that, a lot of these companies are taking a hard hit. Said investors remain sanguine about Vietnam's economy, which is forecasted by the International Monetary Fund to remain amongst the fastest growing in Asia next year. It's not breaking, but it's taking a lot of pressure, said Mohammed Fayez, the Asian economist at Bank of America Securities, referring to the exchange rate and the country's economy broadly. It could be a rough 6 months that Vietnam has to get through. There are more pressures that we think will happen in the near term, and they will probably need to devalue the currency again or hike interest rates. Well, they've already hiked it up pretty good. I don't know if they're willing to do that. They might have to devalue the currency, which most of the time they don't seem to be shy about. So just like Iraq did in 2020, it looks like Vietnam is going to be heading in the wrong direction. But what goes down must come up, so keep that in mind. Market concern is focused on a double whammy of a widening anti-corruption crackdown hitting the property sector that is ensnaring prominent business people, brokers, and developers, and freezing the debt market that fueled their rise. The State Bank of Vietnam is scrambling, raising its benchmark rate to 200 basis points in little more than a month as it moves to catch up with the global hikes. It loosened the shackles on the currency, which promptly fell 4% to a record low last month. Its steep monthly drop in more than a decade, and a move analysts attributed to the foreign investors' outflow since the country consistently runs a trade surplus. So the fact that they run a trade surplus helps them out. But sooner or later, like a lot of those Asian countries, they're going to fall victim to a so-called stronger dollar. It has also placed the country's fifth biggest commercial lender, and that is Saigon Joint Stock Commercial Bank, under supervision after a run on its deposits last month. What does that mean? They had a bank run. People got scared. They started running to the bank demanding for their money. And I'm expecting that to happen here shortly. That's why I don't keep my money in the bank, and this is why you shouldn't either. Only enough to take care of your bills. Officials have blamed tight credit and currency drops for problems this week with fuel supplies in the big cities. This is happening around the world. It's funny how all these things are happening at the same time. It's never been done before, so it makes you wonder, is this naturally happen this way, or has it been planned? The epicenter of visitors' pain is the property sector, and in particular, its chunk of the $24 billion corporate bond market that has ballooned, with officials' encouragement after a banking crisis a decade ago exposed an over-reliance on loans. In 2008, you would have thought everybody would have learned their lesson and figured out that they were kicking the can down the road. No, instead, not only did we have one bubble that bursted back then, now we're dealing with several types of bubbles. The crypto bubble, the bond bubble, the tech bubble. All these things are super inflated in value. The housing bubbles. These things aren't truly that valuable. These things aren't truly as valuable as they are reporting. And so now people are starting to learn that real quick. Pressure is building because 375 trillion dong, which is 15 billion US dollars, its property debt matures by 2025, according to the National Assembly Economic Committee, and authorities have put restrictions on financing it. It grows very fast and furious, said Trent Nugent, emerging Asia economist at Natix. Calculating its value had surged from 2% of gross domestic product in 2018 to 15% in 2021, mostly thanks to debt raised by property firms. The SBV is trying to prevent the sector from excessively overheating. Good luck, we're having that issue now. Not to mention, our government seem to be going out of their way to make matters worse while claiming they're making matters better. It's just not happening. It goes on to say, what kicked stress into overdrive was the arrest last month of property tycoon Trung My Lan, chairwoman of Ho Chi Minh City-based developer Van Tran Phat Holding Group, over suspected bond market fraud. Her suspected ties to the SCB triggered the run on the deposits, as well as the broad rush to redeem property firms' debt and selling in the sovereign bonds market and stock markets to cover losses. Other banks may be affected by the tightening of the corporate bond market, but analysts reckon risk for the bank system are limited. The banking sector as a whole has low exposure to corporate bonds, said Ho Chi Minh City Securities Corporation, a securities brokerage and investment bank. It noted that the non-bank corporate bond outstanding was about 8% of total credit in mid-October. Neither Nexus, Nugent, nor Bank of America's Nagothal expects a crisis. Both are positive about long-term gains from a credit cleanup, and plenty of foreign investors are hopeful. The economic data is still good. I think at the level, given the market drop, it looks interesting, and in fact, if it is weakened further, I'd be looking to add, said Satdura, who manages a dividend fund at Janus Henderson Investors. Patrick Chang, Chief Investment Officer for Equities at Principal Southeast Asia, called Vietnam his top investing idea for 2023. With prices falls market, it's more attractive. So this is how the rich get rich and the poor get poor. You see, the rich start selling all the things and getting liquidity ready. So as soon as the market bottoms out, everything that they sold, they can get back now cheaper. And that includes real estate, stocks, you name it. So they invest in gold, wait for the market to crash, the gold goes up. When the market rebounds, they sell their gold. Now they have a lot more money and they can go out there and invest once again into the proper investments and just catch that wave on the way up in value. And that's how they continue to get rich. It's a vicious cycle unless you know what you're doing. Steel Land's arrest and the SCB event caused a panic, said one fund manager who requested anonymity due to the sensitivity of the subject and a spike in the interbank rates to a decade high around the time of Land's arrest has revived uncomfortable memories of crisis past. We expect uncertainty about interest rates, the crackdown on corporate bond issuance, and weak earning growth to continue to weigh on market sentiment, an analyst at Maybank said in a note on Wednesday. So already one of the banks in Vietnam has had a bank run. We're seeing that happen in 3 different banks over in China. This also happened in Italy and Sri Lanka. So as each country economy crashes, people are indeed trying to get at their money. So hopefully you guys were listening to what I was saying. I would not hold my money in a bank account if I was you. And I understand some of you said, you don't get it, Pimpy. Some of you have millions. I understand that. But what you might consider is then taking the actual money out and keeping it somewhere safe in your house. And nobody needs to know about it. And that includes maybe millions. I mean, I understand the fear of keeping that kind of money in your house, but I would feel more comfortable having my money in my possession than in the bank. Because if they do a bank run and they take your money, then you have nothing. If they do a bank run and your money is with you, then you have it all. Doesn't that make sense? Put it into precious metals. You can always resell them and get money as you need it. As you can see, the Vietnam currency might be getting devalued here shortly, just like all the other currencies out there, thanks to the strong US dollar. Anyways, that's it for now. Leave a comment down below, and I look forward to hearing from you, and I will catch you later. I'm out.